The Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Carrie Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. It's Carrie Lutz, and I have the distinct privilege and pleasure to introduce you personally to the Value Guys, formerly of the Value Line Stock Observer, now of Stock Talk, and they are going viral across the internet, and I don't mean that in a disease sense of the word, and they're here to talk about value and what they're about. I got Val Hughes and Mr. Momentum. Hey, guys.
Hi, Gary. Thanks for having us on.
Well, I've been listening to you guys for years. Sometimes I think I've been in arguments with my wife in the car, although she's within earshot, so I got to keep it down a little.
Yeah, we've got to on the down low at the moment.
Yeah, and
we've heard that a lot of people carry. I mean, there have been, unfortunately, many marriages that have broken up as a result of arguments about us.
Yeah.
And it's not intentional. It's just something that happens, and it just comes with the turf.
We feel a little bad about it, but
I'm glad you guys are still together.
Yeah.
In spite of you guys, or maybe because of you guys, because we'll be a little upset because before GPS, I would get lost a lot. And my wife would be calling me stupid, and then you guys would say something funny, and it would kind of break the mood in the car. So I'm grateful to you for that.
So that's a happy story then about the Value Guys.
Absolutely.
It's about better than a GPS.
Yeah.
Yeah, a real.
My ex-wife not as happy about it, but whatever.
Well, that's why she's your ex. But
yeah, that's right.
But anyway, so you guys, well, Val, you've been doing this for over 6 years now. You've done hundreds of shows. What have you gotten out of it?
Nothing.
Well, we thankfully we don't get any return calls, and so it saved me a lot of time on the phone. I used to do a lot of calls with student organizations and such that wanted to talk about stocks and drinking, and this way I was able to combine both into one show and then send them a link to the podcast. It saves so much time, Carrie, by just doing it once. And they get a little bit about the drinking, a little bit about the stocks, all in one easy-to-use link to the show. And so, you know, and a little more seriously, you know, we like to educate students about stocks. It's a tough business to get into. You know, Mo and I have been fortunate enough to have long careers and long successful careers on Wall Street. Wall Street's a little bit under siege right now, you know, if you read the paper, and I just think that is completely unfounded, and obviously the true story of what it's like to be on Wall Street and what we do for the economy ultimately will be told, and there'll be people much better than us to do that. But if we can do our little part to try to help people understand what stocks are about, how it might improve their own lives and their own portfolios, and we're really promoting the idea of, you know, doing your own work. You don't need a guy in a big ivory tower to understand how to pick a portfolio and put it together. And so we take a little bit of a lighthearted approach. I mean, and we're drinking, and we are drinking, but just to say you can do this even while you're drinking. It's not that hard. I mean, you can't do heart surgery while you're drinking. You can't fly a fighter plane while you're drinking, but you can pick stocks while you're drinking. And I guess the theme of what we try to do is deliver some of those tools and thoughts as to how to go about that yourself. And don't be intimidated by it. Just dive in and make sure you're drinking.
Right.
It's one of the professional secrets that a lot of people outside of the industry don't realize, how important it is to loosen up the brain cells and change your perspective just enough that you see things that you don't see when you're not drinking.
Yeah.
And when we were inducted into the Security Analyst Secret Society, we pledged not to let the general public in on some of these trade secrets, because obviously if everyone could do it, we'd be out of a job.
Right.
Which is why we've sort of gone rogue, have to disguise our voices and let people in.
Well, if they knew, we'd be in a lot of trouble.
Some of the trade secrets that we know, and so we feel that sharing those with the public is a public service.
And a little bit of, a little bit of candor would simply be, one of the hard things with stocks is having the conviction to actually buy the stock. So you can go do a lot of work, you can feel like you have an understanding, but then, writing the ticket, spending the money, and so, we're kidding around here a little bit, but honestly, if you can loosen up a little bit and trust your own work and kind of go with it, you'll have a much better success than if you get a little too stilted in your effort and get a little too serious. You'll do the wrong thing if you don't get a little loose. I'd say it's a little bit like surfing in that way. If you get too stiff, you're going to fall off the board. But if you stay loose, you're going to have a good time.
Okay, so
here's more like sex too, though, because the more stiff you are, the better you perform in other arenas. So it's a balance.
Well, I'd edit that out, definitely, that part.
Yeah.
So here's a question for you. You've been in this a long time. What's the first stock you ever remember discovering, and what was the key that led you to it?
Oh, well, little trip down memory lane. I certainly remember the first stock I ever recommended.
When they first invented railroads, that's when you decided you were going
to... It was a company called United States Gypsum.
USG. USG, right?
USG. I was hired as a building analyst. I wrote my first report, and I remember... we flew out to Chicago. That's where they're headquartered. And I remember my boss came with me, and I didn't understand why. I was like, I can handle this. I'm 23. I know a thing or two. And so we went to the CFO's office. And, of course, the key to their business is housing starts, which explains why they're having a little trouble right now. Mm-hmm. But I had this analysis to show the CFO. I had been I was an MBA, and I come in and I've got this regression analysis showing the correlation between housing starts and the demand for gypsum. And I said to the guy, look, your results are so volatile. I've got the answer right here. Here's an equation that tells you how much gypsum you should be prepared to sell each year. And he just took my little chart and he started laughing out loud. And so I didn't understand exactly why, but he just said, just throw that out. That was not going to work. And, he was exactly right. But I went off and I wrote a buy report. I recommended it. My father got the report. He put it in a frame. And he hung it on my wall, and by the time he put that nail in the frame, the stock was half the price it had been when I recommended it, as we headed right into the 1981 recession. So that was my first stock, Kerry, everyone was so proud of me for doing that, and then but the guys that lost money called me up and
they weren't
yelled
happy.
at me, and that was really my first taste. And I honestly believe that is the way to get introduced to Wall Street. If you have a win or a couple wins when you start, you're going to have a false sense of reality. So you might as well get your ass handed to you right away, because that's going to be happening for the rest of your career on a regular basis.
So it really became a value stock after you bought it, huh?
Yeah, it did, and so it ultimately recovered, I think, about 5 years later, and so. Thankfully, before too long, I was able to have a price above my recommendation price. Just half a decade or so is all that took.
Patience. Successful investing often is like making wine. You need to have patience, right?
I think that's exactly right. Well, you have to understand what the underlying value is of your company, and you have to have that valuation really secured on some anchors that might be some assets that you really understand the value of. And you have to have a sense that they will endure, because you're going to hold this thing a long time. So if it's a fashion or a fad, that's not going to be a candidate. So it's got to be something where there's a really entrenched competitive advantage. And then, as you well know, Carrie, a lot of the stock market is psychology. It's where reality meets psychology. And so you have to take that into account. You have to understand the psychology of fear and greed on Wall Street as it relates to the underlying fundamentals, and make sure that you don't get caught up in the fear and greed, and make sure that you're always as objective as possible in understanding the underlying value of the securities you own. And the other thing you have to do is, if you make a mistake and you're wrong, admit it and
Cut
move
your
along.
losses.
Don't invent a new reason why you think you should hold on to something. And I'd say those are the two keys. Do your homework, have patience, but if you are wrong, admit it fast and move along.
And Val, I'll throw something else in. My first group of stocks was in the early 1980s, and they were cable TV stocks. And investors said consistently, why would I pay for old programs, which was the only thing cable TV had to offer, when I can have brand new programs that are free? And the industry talked about narrowcasting, and how, because you could have ultimately hundreds of channels on cable TV, how they'd be able to address everything from the wood-burning channel to the fly fishing channel. And there was an intuitive amount of the common sense to that. And I invested pretty heavily in that, and made a lot of money. And the second industry that I made a lot of money in was the cellular telephone industry.
Same story.
It was a simple premise. What if you had a telephone with no wires? There were thousands
that
of
you could carry anywhere.
There were thousands of people that had these very esoteric explanations for why it wouldn't make sense. Demographic arguments, economic, technological arguments. But I've always found that if you have a very simple premise, cellular telephones, it's a telephone with no wires. Cable television, it's a network that allows you to address a niche programming. And Peter Lynch was a big proponent of that. If you can understand what you're investing in and it makes sense to you, and you invest in it, you hold it for the long term, assuming you also stick with Val's premise, which is know when to cut, know when to get out of there, because you don't want to ride it down to zero. But keep it simple, have a concept that makes sense to you. If you do that, more often than not, you're going to make money. And it's usually when I hear these pitches from companies where I think, I don't really know what you do. I don't really know what your premise is. More often than not, those are the kind of companies that you don't want to put a lot of money into.
It's like your coach used to say in baseball, if you can't hit a curveball, don't swing at the curveball. So the nice thing about the stock market is there's 20,000 securities out there, and you need about 50 of them. So, you can just wait for the ones that you really get, you really understand, you understand why they're going to continue to win, you understand why their competitors aren't going to beat them out, which they're trying to do every day, you understand why their pricing and their margin's going to hold up. And those are the ones you own. And the ones that you don't understand, Wall Street has a big effort going on to persuade people that they need to do something urgently, because that's how they make money. When you buy, they make money on the trade. When you sell, they make money on the trade. So the professional analysts on the sell side who write reports and they get in the paper, and, both Mo and I used to do this for decades, their whole game is get you scared so you sell, get you greedy so you buy, and you're whipping up and down. It's like bipolar disease out there for the average investor that listens to Wall Street. You really have to separate yourself and certainly use Wall Street research for the fundamental knowledge that's in those reports. But I'll tell you something, when people run studies on whether Wall Street analysts know when stocks are going to go up or down, they simply don't. And the reason is that they're following a single industry, and if you ask a telecom analyst what his favorite stock is, it's probably a telecom stock, and his least favorite stock is a telecom stock. It might be that you shouldn't be in that industry for the next 10 years, and those industry analysts on the street aren't going to tell you. So my recommendation actually to people who want to have a good information flow is find your favorite fund managers. So if you're a value investor, find the smartest value guys. If you're a growth investor, which frankly you shouldn't be, but if you are, find your favorite growth investors and get their prospectuses, get their quarterlies, see what they're buying, see what they're selling. And frankly, that's a lot better information flow than reading the Wall Street Journal to see what the Goldman Sachs analyst did yesterday. And that's not with any disrespect to Goldman Sachs, in case I know anyone there. But it's a good rule of thumb. Find the best managers and see what they're doing, and that's a much better road to follow.
And here's an even less technical or less institutional approach. Look at what you do in your everyday life and ask yourself, is there a way to invest in it? Here's an example. My wife read 2 years ago an article that said, there are certain foods you shouldn't eat that have pesticides because the pesticides can get through the skin, apples and peppers. And so she started going to Whole Foods to buy just 4 or 5 items that you really should only eat those items if they're organic. She was in Whole Foods and she started to say, the cost of their meat isn't that much more expensive than the regular grocery store, and so we started buying our meat there. We started buying our oats and our vegetables there. Before you know it, she was buying pretty much all of our groceries there. Well, she said we should invest in Whole Foods because I'm shopping there more and more and more, which we did. And guess what? Same store sales in Whole Foods are going up and up and up, and the stock has been a killer stock. Why? Because normal people like it.
They're gaining a lot of share.
They're gaining a lot of share. So a lot of times those investment ideas are right in your backyard.
But don't overpay. I mean, that's all true, but if you're too late, it'll be too expensive. That same thing that Mo's talking about can push a stock up in value even after it's fairly valued. And like Starbucks. Starbucks got overvalued because everyone that went in Starbucks thought it was great and started buying Starbucks, but they were buying it after it had already reached a fair value. So I think Mo's point is very well taken, but that's if you're early on. So if a new event comes into your life or a new store in your neighborhood or what have you, and you're early, then I would second those thoughts of Mo.
That's true.
So I got a stock for you. Question, because my sister bought this stock at $8 a share. I don't remember when. She bought 100 shares. Recently, it had split twice, so she was up to 400 shares, and the stock was trading at around $450 a share. So you know what stock I'm talking about, right?
Maybe. Apple?
You got it. And so she now has 200 shares at, I don't remember where it closed today, 550. She's just kind of held on to it. She's got the equivalent of 50 shares of what she started out with, but now it's 200. So you look at Apple, and is that a value stock, or is it a growth stock, or is it something else altogether?
Got a low PE. It's got a huge cash position. I don't know. What do you think?
Well,
you're the value guy.
We talk about that in the shop a lot. Because if you look on a sort of an enterprise value to EBITDA basis, back out the cash, kind of sits there as a value stock. We actually have taken a little position there because we got tired of explaining why we didn't have a little position in Apple. But I would say that is it a growth or a value stock? Here's where we came out on that, is that it's not a toll booth. So while Apple has tremendous goodwill and is the most valuable company in the world, that all happened in the last few years with the success of the iPhone, iPad, and iPod. I mean, before those 3 products, I've been using Macs. I had an Apple II back in 1978. I mean, they've had products around, but they were not a mass market company, because they were in this niche. And then with iTunes, iPods, etc. My point might be that they now are a little bit of a fashion company in the sense that the products they've put out the last few years are such huge hits that it's propelled them to this valuation. But is that predictive of the next 10 years of products? And I think the people who say, yes, it's a value, well, are you sure that the Apple phone is going to continue to be what it is, or the iPad, or in order to think Apple's a value, you really have to believe that they have an annuity at this level of sales and earnings, which is on the backs of three of the most successful products in history. So if in any field. So if you think that there's a culture there that can continue to deliver that, and it's like a machine that you're certain of it, then absolutely it's a value. If you think there's a fashion element that the next thing that comes out is going to be a bomb and those sales will fall off, well, then you might want to wait for that event before you buy Apple. Because my suspicion is, and I'm not predicting, I love Apple, but, you know, the law of large numbers is such that you don't have hits in a row forever, and I think what the stock is telling you, because it's obviously not an undiscovered stock, so everyone in the world is going through the Apple financials. Why is it trading at 10 times? Because there's a risk in some people's view that some of these future products will not be the home runs that these past products have been, and so that's why, you know, we came out halfway on that, and so we took a half position. That's how we solved that problem, was we just said, well, we're not sure. We certainly think they have a culture of excellence, and they certainly have a tremendous amount of goodwill, so even the next product, if it's bad, will probably sell a lot. They'd have to have two bad ones in a row to really hurt the brand. And, you know, no one here thinks that they're going to do that, but that's how stocks are. The things that you think are going to happen are already in the price.
The question that I have is how much do they generate from iTunes? Because you can only sell so many iPhones, you can only sell so many iPads, and when you're in the equipment business, you really have to come up with a killer new product to get somebody to change out their old iPhone for a new iPhone. Yeah. Whereas if you're in something with like an app business and you're just selling 99 cents, it's the annuity. It's, you want to really be in the razor blade business.
Yeah.
For them,
I don't think iTunes is big enough to drive the valuation right now.
They should want to be in the razor blade business on there, and they're right now in the.
They're in the. They've always been in the razor.
So I guess the answer is sell half your position in Apple, put it in Facebook. You can get the share.
Well, I don't know about that.
Well, hard to know, but that leads to the next thing. You used to be the value line observer. You're doing your thing for 6 years. You're advancing the cause of this company. They should have had you on the payroll. And the next thing you know, you get a basically a nasty FU letter from them. Cease and desist.
Cease and desist.
Yeah. Like, what did you do wrong? Like, you only helped the company. Are they that blind?
You know, I don't know. You know, we were using the name Value Line Observer under the Fair Use Act. So we weren't Value Line. And if you go read the Fair Use Act, and I think you're an attorney, I mean, it's out there.
Don't hold it against me.
The Fair Use Act says it's a fair use to observe other publications, and it's in the public interest to have the press observing people and reporting about them. So, you know, think of the names for newspapers. The New York Observer, it's not New York, it's observing New York, right? the Los Angeles Times, it's not New York, it's not Los Angeles, it's about the Times of Los Angeles. So I think there is a general understanding out there amongst the readers of America that if someone's observing something, they're not that thing. So we based the show on that. I've been a lifelong Value Line subscriber. It was a good way to talk to students because it was usually at their library, and it was an easy way to sort of enter the world of stock market information. It was very approachable. And so I always talked about Value Line with students as a way to, you know, become familiar with the stock market. Well, you know, it's also a way to start buying Value Line for your whole life, which I've been doing. And we thought we were on pretty good ground. We had a lot of good publicity about the show. We never had a single bad email from anyone saying we were harming Value Line or that, you know, what in the world did we think we were doing? And so the fact that Value Line didn't call us for 6 years, I actually had a little paragraph on the site about Value Line, that we weren't employees there, we weren't connected, we used the Value Line, and We recommended that other people use Value Line. And so the fact that they hadn't called us, I actually had a comment on there that said, I wonder why they haven't. Well, it turned out they were simply unaware. So we got the cease and desist from a lawyer there who didn't own any shares. In fact, if you go study that company, it's an odd ownership structure where I think the founder, who's 86, owns something like 90% of the shares. And even at the CEO and CFO level, Carrie, the ownership of stock is $100,000 or so for those people, so not enough to act like owners. And I'm sure this lawyer was just, following orders. And, here's someone, The fact is that if you Googled up the words Value Line, our show came up before Value Line. And I think that probably pissed them off. It's like, what? Who are these guys? And so we got the cease and desist. I'm sure they never listened to the show. And their demands were for us to stop doing the show, take down all the shows. They wanted to have the rights to the name The Value Guys, and they wanted us to simply stop doing the show. I wrote them a letter, and I basically told them to blow. I said, we have the rights to be observing you. We're the press. We are observing, and we're commenting, and we're offering value. I had 100 emails from listeners, Carrie, that were upset with Value Line, and I actually toyed with the idea of showing up in court in my Val Hughes costume, just to show how ridiculous this was. But at the end of the day, Carrie, our mission of bringing ideas, and sort of thoughts about the stock market to students and other people that might be listening, it's easy enough to change the name of the show, to broaden our list of stocks beyond what was in Value Line. I mean, we kind of got caught up in that. And now, we're basically using the screens that we use in the shop to generate stocks that we actually buy. That's what we're now doing on the show. So and
it's a blessing in disguise.
Yeah, it really is.
I do think we've got a lot more bandwidth that we can choose from, more interesting names, more fun names.
Yeah,
but it's often better names.
Yeah, I can't explain to you, Carrie, why they felt the need to do the cease and desist. I'm going to guess that they've lost a lot of subscribers because people wrote me to tell me they were canceling. And I think it's entirely because Value Line is such a sleepy, backward company. I mean, honestly, I looked at it, and I looked at, there's this company called Morningstar that did not exist 20 years ago, and Value Lines existed for, I think, 60 years. And Morningstar has just completely blown by them, taken their franchise. They do a much better job. And honestly, I think the Value Line people are a little bit under siege. And so, rather than see us as an ally, they tried to kill us. So it ended up that kind of got us mad. And so rather than it became silly to argue that we should continue to use the Value Line Observer name when Value Line got us mad. So why would we want to, at that point it was like, screw you. We're not going to keep advertising your company. And we're going to do our own show, that's all.
It's too bad because I also think that the Value Line name in professional circles evokes this notion of brown paper and three-ring binders. It's become largely irrelevant, and I thought we were showing that there was real value, that two professional guys can take that data dump on their pages and really do some solid analysis there.
And introduce it to younger people who were missing from their subscription base. So
their loss, our gain.
Yeah.
Absolutely.
So we're past that now, and they really helped us by doing that, honestly.
Thank you, Value Line.
Thank you. Their offices are right across the street from Grand Central, and I used to call on them as a sell-side guy. Our salesman would drag me in there, and they're on 57th Street, and you go in there, and honestly, it was like you were in the 1920s. It was like a time machine. And you'd go in, and there'd be all these old guys.
Polyester suits and wide ties.
And I'd be like, why are we here? And, their performance was terrible and all that, and And so I think this event has really opened my eyes to the fact that, they're a very sleepy old company. There's only one guy who cares about it, and he's 86. We're just moving along. So
I don't want to be too critical, because someday we'll be 86. We'll be doing this, and we don't want people,
But we'll let them use our name if they want to.
That's true.
We won't do that.
But all in all, I think it's a better move. We're finding way, way better stocks, way better investment ideas.
And also our audience is way up. So I think that people enjoy the fact that we're now just a much more realistic show where, in fact, last week, Carrie, the show we did was just me grabbing stuff out of the conference room that we'd been working on earlier in the day. So that was never happening when we were simply looking through Value Line. So I think we're better off, the listeners are better off, and
the world is a better place.
Yeah, it is.
Hey, well,
I was happy with the new name of the show, the Value Guys Stock Talk Show. We kind of like that.
It's got a nice ring to it, and the show is 100% better because you've thrown off the shackles of their antiquated format. And just to tell you about value, in 1996, the stock was trading at $29.75. Today, it closed at $12.94. So maybe they should start looking at how they can broaden their market rather than harassing a couple of guys banging back a couple of drinks after work and using their product, giving them free publicity to thousands of people. It's not a real smart business move.
I don't think so, and I told them that directly, but what have you.
Yeah, that's what's wrong with certain companies. You have to adapt. And
we're appreciative now, actually, Kerry, because this has turned out much better. So in a weird way, we thank them,
Yeah, it worked out well. Well, I got to get running here, but it's been a lot of fun with you guys, and looking forward to spreading your message to the world here, getting it out, because, man, one thing you need on a Friday afternoon or a Saturday is you need to be able to hang out, listen to a podcast, have a couple of laughs, get a couple of investment ideas even that might make you some money. I've actually made some money on a couple of the stocks that you've mentioned.
Where is a show like that, Kerry? I want to listen in.
I don't know, but if I find it, you'll be the first to know.
Thank you very much.
All right, guys. Hey, thanks. It's been a pleasure.
Thank you. All right. Talk to you later.
For more information, valueguys.com. You can find them. All their shows are going to be posted on the Financial Survival Net YouTube channel and on financialsurvivalnetwork.com.
Yep, and we'd like to thank our sponsors, Goldman Sachs and Grey Goose Vodka.
Yes, thank you.
And not J.P. Morgan Chase today.
Not today.
Not today.